Welcome to TechEyeSpy, where we dissect the world's most important technology companies through the lens of investment and strategy. In today's episode, we turn our attention to Micron Technology, one of the key pillars of global semiconductor memory production. Founded in Boise, Idaho in 1978, Micron has evolved from a small regional manufacturer into a global powerhouse producing DRAM, NAND flash, and emerging memory solutions that fuel everything from artificial intelligence systems to autonomous vehicles. Unlike many chip makers focused on logic processors or custom silicon, Micron's influence lies in the silent infrastructure of computing memory. Every smartphone, every data center, every AI model relies on the unseen flow of bits that Micron helps store and retrieve. It is this essential role and the cyclical yet strategic nature of its business that makes Micron both a risky and potentially rewarding investment. As global supply chains adapt to the new reality of technological sovereignty, memory has become more than just a commodity. It is a strategic asset. Governments are investing billions to secure it. Companies are realigning entire data ecosystems around it. And investors are rediscovering how critical the memory cycle is to the broader semiconductor economy. So in this episode, we will break down Micron's position through a full SWOT analysis, examining its strengths in innovation and scale, its weaknesses in exposure to pricing volatility, its opportunities in AI and automotive applications, and the external threats that continue to shape the chip landscape. Let's begin with strengths. Strengths. Micron's greatest strength is its mastery of memory architecture. While many competitors focus on processing power, Micron has devoted its decades of research to perfecting how machines store and recall information. Its portfolio covers the three critical types of memory: DRAM, NAND, and NOR, each playing a vital role in the digital economy. In data centers, Micron's DRAM keeps servers responsive and efficient. In smartphones and laptops, its NAND flash allows for faster, more compact storage. And in industrial or automotive applications, its NOR and emerging non-volatile technologies ensure reliability under extreme conditions. A second strength lies in Micron's vertical integration. Unlike many fabless companies that rely on third-party manufacturers, Micron designs, fabricates, and tests its own chips across multiple global sites. This gives the company tighter control over quality, production yields, and intellectual property security. It also means Micron can scale or throttle output strategically, responding to supply-demand cycles faster than competitors who are dependent on outsourced capacity. Third, Micron benefits from deep process expertise and node leadership. While the public often associates semiconductor leadership with companies like TSMC or NVIDIA, Micron's advancements in memory cell density and power efficiency are among the best in the world. The company's move toward 1-beta and 1-gamma process nodes, each representing a new generation of smaller, more efficient memory, allows for higher capacity per wafer and lower cost per bit. This technical progress is a primary driver of profitability during market upturns. The fourth strength is strategic diversification across industries. Micron supplies chips to a broad range of sectors: smartphones, data centers, automotive, gaming, industrial automation, and increasingly, artificial intelligence. The surge in demand for high-bandwidth memory to support AI training has opened a new frontier. Micron's HBM3E products, designed for large-scale AI accelerators, position it directly alongside giants like NVIDIA and AMD as a critical enabler of machine intelligence. This AI-driven demand, paired with the company's long-term supply contracts, provides a stabilizing counterbalance to the historically cyclical nature of memory pricing. Another underappreciated strength is government alignment. As the United States, Japan, and India push to localize semiconductor supply chains, Micron has become a key beneficiary of state-backed investment. The company's multi-billion-dollar facilities planned for New York and Gujarat demonstrate how government funding is now helping Micron expand capacity while reducing geopolitical risk exposure to East Asia. These initiatives not only boost production, but also embed Micron within the emerging global map of chip sovereignty. Finally, Micron's balance sheet resilience and capital discipline have matured significantly since the volatile early 2000s. The firm has improved liquidity management, reduced long-term debt, and maintained a focus on free cash flow generation even during downturns. This gives Micron a defensive layer of stability, allowing it to continue research and capital investment when weaker rivals retreat. Together, these strengths paint a picture of a company that is not only technologically formidable, but strategically aware of its global importance. Micron's ability to blend innovation, integration, and timing keeps it at the heart of the world's memory infrastructure, a foundation for every bite of progress the digital economy makes. Weaknesses. For all its technical mastery, Micron Technology remains vulnerable to the brutal cyclicality of the memory market. Unlike logic chips, where design innovation can create enduring competitive moats, memory is primarily a commodity business. Prices rise and fall in waves dictated by global supply and demand, often with little correlation to the company's operational performance. When inventories build up or demand softens, prices collapse. This cyclical pressure can swing Micron from record profits to sharp losses within a single year, creating volatility that unnerves even seasoned investors. Another weakness lies in Micron's high capital intensity. Each new generation of memory fabrication demands immense investment, billions of dollars in clean rooms, lithography systems, and process equipment. Unlike software or fabless chip designers, Micron cannot simply scale with demand. It must spend heavily in advance to prepare for each technology node. The lag between these investments and their payback periods can strain cash flow and make the company highly exposed to macroeconomic downturns. Micron also faces structural dependence on global supply chains, despite recent efforts to localize production. While the firm fabricates much of its technology internally, its ecosystem still relies on critical tools, materials, and equipment from other countries. A disruption in ASML lithography deliveries, chemical supplies from Japan, or wafer equipment from South Korea can ripple through its production network. Geopolitical shocks, particularly those involving China and Taiwan, could therefore impact Micron, even if its own plants remain operational. The company's brand visibility outside the semiconductor industry is another subtle weakness. Consumers recognize Intel, Samsung, or Nvidia, but Micron's own name carries less emotional weight. Even though it owns the crucial brand for retail memory, its profile in the public imagination remains largely invisible. That lack of recognition limits its influence in the consumer market and its ability to command premium pricing based on perception rather than specification. Micron's research and development costs are another pressure point. Staying competitive in DRAM and NAND requires relentless miniaturization and material innovation. Each node shrink increases complexity and lowers tolerance for manufacturing errors. When rivals such as Samsung or SK Hynix achieve similar or superior yields at comparable scales, Micron's margins can quickly erode. The difference between leadership and lag can be measured in nanometers and in billions of dollars in profitability. Finally, Micron's limited diversification beyond memory leaves it exposed to a single category of product risk. While this focus has allowed it to excel in its niche, it also means Micron lacks the insulation that more diversified peers enjoy. Companies like Samsung offset memory volatility with consumer electronics and foundry services, while Nvidia and AMD leverage software ecosystems and platform control. Micron, by contrast, must live or die by the memory cycle itself. In essence, Micron's weaknesses stem not from poor execution, but from the structural nature of its business. It is a company defined by high capital costs, low public visibility, and cyclical vulnerability, yet one whose performance can swing dramatically with the tides of global data demand. Opportunities. The future for Micron Technology lies at the intersection of data, intelligence, and sovereignty. As the world transitions into an era dominated by artificial intelligence, cloud infrastructure, and autonomous systems, memory is becoming not just a component, but a form of capital, the warehouse of digital thought. Micron stands positioned to benefit from several profound shifts now reshaping the semiconductor landscape. The most visible of these is the AI revolution. Training large-scale models like ChatGPT, Gemini, or Claude demands enormous quantities of high-bandwidth memory. Each new generation of GPUs and AI accelerators requires more bandwidth and capacity to feed data to processors in real time. Micron's entry into the high-end HBM3E market, supplying next-generation memory stacks optimized for AI workloads, represents a major strategic inflection point. For the first time, Micron is no longer merely an upstream supplier. It is becoming an enabler of artificial cognition itself. If adoption continues, this could lift margins and create a more stable, long-term demand base than traditional PC or mobile cycles ever offered. A second opportunity lies in automotive and edge computing. As vehicles evolve into data-rich machines filled with sensors, cameras, and onboard inference chips, demand for rugged, low-latency memory is accelerating. Micron's automotive-grade DRAM and NAND already dominate many of these systems, and the growth of electric and autonomous vehicles multiplies that potential. Each advanced car now carries more than 100 gigabytes of memory capacity, a figure likely to double within the decade. Another strong avenue for growth is data center optimization. Hyperscalers like Amazon, Google, and Microsoft are redesigning architectures to improve efficiency and power use. Memory bandwidth has become the new bottleneck in cloud performance. Micron's low-power DRAM and storage-class memory solutions provide a path to higher throughput without equivalent increases in energy consumption. This is an underappreciated advantage as cloud providers face mounting pressure to reduce emissions and energy bills. Micron is also poised to benefit from the geopolitical restructuring of semiconductor supply chains. With the US CHIPS Act and similar initiatives abroad, national governments are investing billions to bring fabrication closer to home. Micron's planned fabs in New York and Gujarat are not only funded in part by public subsidies, but strategically positioned to serve growing regional demand. This public-private alignment represents a rare long-term tailwind for a company that has often been at the mercy of market cycles. There is also the emerging field of new memory technologies. Micron's work on 3D XPoint, resistive RAM, and phase change memory points toward a future where traditional distinctions between memory and storage blur. Although still commercially early, these technologies promise faster access times, higher endurance, and lower energy use characteristics ideal for AI inference at the edge or neuromorphic computing systems that mimic the human brain. Finally, Micron's financial and structural discipline gives it flexibility to pursue strategic acquisitions or joint ventures as the industry consolidates. Smaller niche players developing advanced materials, packaging, or integration tools could become valuable targets, allowing Micron to deepen its capabilities or secure new markets. In short, Micron's opportunities are vast and closely tied to the defining technologies of the next decade: artificial intelligence, autonomous mobility, cloud infrastructure, and national resilience. Each of these depends on memory, and in memory, Micron is already there. Threats. For all its technological promise, Micron operates in one of the most volatile and politically charged industries on Earth. Its greatest external threat is the global memory price war, an unavoidable feature of a market dominated by just three players: Samsung, SK Hynix, and Micron itself. These firms account for nearly all of the world's DRAM supply and most of its NAND flash production. When one company expands capacity aggressively or cuts prices to defend market share, it triggers a destructive chain reaction. Profit margins evaporate, inventories swell, and capital investments stall. Micron has weathered such cycles before, but each recurrence drains reserves and tests shareholder patience. A second major threat lies in China's strategic ambition to develop its own memory industry. The Chinese government has poured billions into state-backed entities like YMTC and CXMT, hoping to achieve technological parity with the West. While export controls and US sanctions have slowed progress, these companies continue to advance. Should China successfully mass-produce competitive DRAM or NAND, Micron could face not only price competition, but geopolitical retaliation. Indeed, in 2023, China restricted Micron products from use in critical infrastructure, a signal that technology policy can turn into trade warfare overnight. The third risk comes from macroeconomic cycles. Memory demand is deeply linked to global consumer behavior. Smartphones, laptops, and data servers all rely on discretionary or enterprise spending. A recession or tightening credit environment can trigger an abrupt correction in chip orders. The lag between demand recovery and inventory adjustment often leads to overproduction and heavy losses. Even as AI and cloud computing create more stable end markets, Micron remains exposed to downturns in traditional electronics and industrial demand. Technological disruption also poses an existential risk. Rapid changes in materials, science, or architectural innovation could make existing manufacturing techniques obsolete. Competing technologies such as spin transfer torque MRAM, ferroelectric memory, or quantum-based storage might eventually replace conventional DRAM or NAND in specific niches. If Micron misjudges the timing or scale of such transitions, it could lose technological leadership despite its deep expertise. Another long-term threat involves energy and environmental constraints. Semiconductor fabrication is resource-intensive, consuming vast amounts of water and electricity. As sustainability regulations tighten globally, Micron must continually invest to meet environmental targets while maintaining profitability. Any failure to do so could lead to fines, reputational damage, or production restrictions, particularly as new facilities expand into regions with strict ecological oversight. Finally, talent and geopolitical tension remain unpredictable variables. Skilled engineers, lithography experts, and process chemists are in short supply. At the same time, political friction between the United States, China, and Taiwan continues to escalate. A regional conflict or blockade affecting Taiwan's semiconductor logistics would ripple through the entire global industry, cutting off critical equipment and materials. Micron, though geographically diversified, could not escape such a disruption unscathed. In summary, Micron faces a complex web of threats, market cycles, state-backed competition, environmental mandates, and global instability. Yet these very pressures also serve as catalysts for innovation and discipline. For Micron, survival has always meant adaptation, and its future will depend on how well it can navigate the fragile balance between technology and geopolitics. Conclusion: Micron Technology stands as both a symbol and a survivor of the semiconductor age. It has endured booms, busts, and battles for dominance in one of the most unforgiving corners of the tech industry. Yet through it all, Micron remains one of the few Western firms still capable of producing leading-edge memory at scale. That resilience is not just financial, it is cultural. The company's engineers have weathered decades of disruption, learning to innovate faster than the cycles that try to break them. The story of Micron is a reminder that not all innovation happens in the spotlight. While companies like Nvidia or Apple dominate headlines, Micron operates quietly beneath the surface, ensuring the data those processors handle has somewhere to live. Every photo stored, every neural network trained, every blockchain mined relies on memory. And memory is Micron's domain. Investors often struggle with the cyclical nature of this business, watching profits rise and fall with dizzying speed. But when viewed through a longer lens, Micron's strategy reveals a patient and deliberate climb toward higher value markets, from commodity memory to AI-grade performance, from fragile dependence on Asia to a distributed global presence. The next decade will test every semiconductor firm's ability to balance national interests with global demand. Micron's alignment with US and allied manufacturing strategies, its investment in high-bandwidth memory, and its steady technological roadmap give it a foundation few others can match. Yet volatility will remain part of its DNA, both a risk and a reminder of its importance. As AI, automation, and cloud infrastructure continue to expand, the world will need more memory, not less. And so long as information itself remains humanity's most valuable resource, companies like Micron will always find their place in the center of progress. Thank you for listening to TechEyeSpy, where we analyze the companies shaping the future of technology and investment. If you enjoyed this episode, don't forget to like, subscribe, and explore our other SWOT analyses. Each story reveals another side of the innovation economy, and Micron's chapter, in particular, shows how endurance can be a strategy all its own.